But right now it's time for the quote of the week. This comes via the author of 1984, George Orwell, in quotes, "All political thinking for years past has been vitiated the same way. People can foresee the future only when it coincides with their own wishes, and the most grossly obvious facts can be ignored when they're unwelcome." End of quote. Welcome back to the show, Danielle Park, the author of Juggling Dynamite. She's also president of Venable Park Investment Council. Danielle, great to chat with you again.
Hey, Mike.
Well, let's talk about it. I always love to hear from you what you think the lay of the land is for investors, the sort of context that we're looking at. I mean, so much central bank job-owning about, new rate up or not rate up, that kind of stuff. So just tell me what you're sort of thinking when you're looking at your investment portfolios.
Well, Mike, I think it's all about currency at the minute. I think that, we saw some mean reversion in asset markets coming into early February, let's say, and that was sort of reality coinciding, sort of realigning again with the reality of a slowing growth world, of declining corporate profits. The S&P earnings have been actually in decline since 2014, notwithstanding all the hijinks of buybacks and all that. So I think we're getting a secular compression in those what were insanely high earnings numbers and profits. It's swinging the other way. I think globalization is mean reverting. So everything that was, the benefactor of the enormous credit bubble that fueled everything, say, over the last decade is in mean reversion at this point. And we had a spike since February, but I think that was mostly driven by this sort of volatility in the U.S. dollar. Peaked, the U.S. dollar index peaked at around 100 and has been sideways since. And during that period, you have all this speculation about what policymakers are doing. But the nub of it is quite simple. I think, the charade of extend and pretend has really run to the end of all credibility. And I think that now the Fed is backed up in the corner where if they don't raise rates, they've lost all hope of commanding any confidence from there. So you're seeing that the U.S. dollar has been treading water here, will they or won't they? And I think that the real risk is that, as we saw in the data, the economic news last week, it continues to disappoint pretty much worldwide. And as that does, I think that you're having this fight for, where will all this excess capital go, Mike? Think about that. This financialization preoccupation has added trillions and trillions of basically vapid gains to asset markets globally over the last, since 2008. I was looking at this. It's kind of interesting. So there's something like $300 trillion today cycling through global financial markets. And you know what? We didn't add any more actual land to planet Earth in the past 10 years, Mike. What we did was we added derivatives trading, which is probably, magnitudes of what it was, shadow banking, trillions a year in growth. Financial assets are something like 375% of global GDP. Real estate, something like 14 trillion. I mean, this is all ludicrous mode, right? And it's all about financialization and this mythology that you can make value out of adding zeros to assets. And so I think we're at the end of that, and that means the U.S. dollar is likely going to be the safe haven trade again, whether or not they raise rates. I think that you have so much money, and it has to go somewhere. This is basically redundantly cycling through financial markets. It's not prepared to invest in real tangible things in the economy because the growth picture is poor everywhere people look. So it's really captive capital recycling through like useless. And that means that I think you're going to find them pooling in the deepest, widest markets, and that's still U.S. Treasuries, U.S. dollars. So I'm thinking that this blip we've seen, this rally in risk assets since February, I don't think it's that durable. My impression is commodities and whatnot are going to have another leg lower.
I saw an amazing stat this week that now we've got up to $10 trillion of negative yield, $10.4 trillion of negative yield sovereign debt. And I'm just thinking, my gosh, if somebody had said that 15 years ago and said, hey, guess what? Government bonds are actually going to be negative. They'll pay you to buy them. I mean, it's that kind of, or you're going to pay them rather to take your money to lend it to them. And
that's exactly right.
Yeah, it's crazy.
And here's the real net impact of that, Mike. So this is central bankers sure know how to wreck a world economy, and they've done a brilliant job of it. But you live in they've got us in this crazy world where yields are negative, Swiss, Japan, Germany, all the way out to 10 years and beyond now, okay? But what's happening with that? Banks can't make profit anywhere now, or in the normal lending business anymore. So what they're doing is they're raising loan rates to the real people in the real economy. And so that's having, this whole idea of central banks was cut rates, make money cheap, and people will borrow and spend. No, now rates are going up in this perverse dynamic they've created because banks are trying to gouge profits wherever they can find them. So, what we need is more savings in the world. What we need a whole lot less of is this speculative nonsense that just recycles zeros and wastes everybody's time. Because if you look at it, great, the TSX has rallied. The TSX is back below where it was in May of 2008, Mike. Great, oil rallied, heavily off the bottom in February. We're still more than almost 50% below where it was at the peak, And it's just, you can take every asset class that you want to name, and essentially they have violent swings, much noise, getting nowhere fast. And no one can afford to actually buy these things as investments or, I was reading the Globe this morning. They were talking about Vancouver real estate and how crazy it is in Toronto and all that. And they were saying, well, they can't change anything about the foreign ownership rules because that might take zeros off the value. Well, of course you have to take zeros off the value. Otherwise, it's just ludicrous and silly and doesn't make any investment sense, and you can't have anyone that wants to actually live and produce and use things in a useful way actually acquire assets when they're at these crazy prices. So it's just, the system's broken. We need a major cathartic event, and I still believe it's not too far away.
I'm talking with Danielle Park, president of Venable Park Investment Council, author of the book Juggling Dynamite. I'll take a break. I'll come back. I'll ask Danielle what he thinks, okay, so what do we do with our money? How do you individually, what are the things you should consider doing? Plus, I've got my favorite story of the week and a shocking stat. All of that coming your way. Glad you're with us on the Money Talks Network. Coming up, I've got my shocking stat. I've got, I'll play this, a business comment that got, let's say, a lot of response. But right now, very pleased to have with me Danielle Park. She's the president of Venable Park Investment Council, but you can find her at www.jugglingdynamite.com, www.jugglingdynamite.com. Danielle, before the break, you were doing a great job of sort of laying out the context of which we're making our personal investments. Can you just sort of, I know it's general and we have a broad audience and they should discuss it with a financial advisor, but within that context, can you tell us what you think people should be doing?
Yeah, actually keep it simple. I think that the complexity that has evolved in these financial products and markets is all sort of a cloak for great deceit and corruption at the moment. I think there's a lot of dangerous information being sold to people as advice. I think that this whole, first of all, pay down your debt, get out of debt. The whole idea that you have money to invest if you're still in debt is counterintuitive. Pay off your stuff, live within your means, build up your savings, and then when you get your savings, look for intelligent places to put it. There's speculation that people can do if they want to pair off a portion of money and say, I'm going to try and trade against the HFT machines and see if I can outwit something or whatever. Fine, do that as a hobby, do that as an interest, do that with a little fraction of whatever savings you've got, but only after you've set aside, as I say, as the bulk of your savings, and then with the bulk of your savings, figure out somewhere that puts it, that is going to hold its value and not see it implode with all these bubbles that are likely to burst. So the people that I'm most worried about today are the ones who are following the conventional asset managers out there who are suggesting that people can be diversified across a portfolio of stocks and corporate bonds, and that you move a bit of money everywhere and it's all going to work out and you can take your income. I think it's a disaster. I think that the values of those assets are so remarkably overvalued that you could lose half your capital in a heartbeat, and that is not going to work for people, especially if they're, God forbid, trying to stop work and be retired and live off their savings. So now is the time to focus on building up savings by all means, to get out of debt by all means. But this no borrowing to invest, that's lunatic fringe in these markets, and that includes whether you're speculating in real estate or in trying to borrow and buy securities portfolios. It's absolutely crazy. So I would say just don't do all that complex stuff that people tell you is, financial, whatever it is. It's madness. And stick with what makes sense. So that means, guaranteed deposits with your savings, keeping things liquid. We like provincial and municipal governments have been, in Canada, for example, have been issuing debt because they're, shoring up for the slowdown that's coming. I like places where they can raise taxes to pay. So, I prefer that high credit quality over anything in the corporate space, which again, much more write-offs, I think, coming still before this cycle plays out. Keep in mind that corporate bonds move with the equity cycle. So if we're going to see much further downside in equities, I think, in the months ahead, you could see the same thing still in things like preferred shares, which are equities, by the way, and corporate debt. So all this financialization that's made all this complexity has done no favors to investment value. But the beauty of it is that reality will intervene here. The weight of the thing will mean revert. And that's when you want to be one of the few people that has planned ahead and kept liquidity and built up savings. So you can make, you can make a lot of smart choices. They're just not what the mainstream is trying to get you to do right now at the third bubble peak in 16 years.
The other side I'm finding so difficult is that the markets, I was just telling my son, I feel that the markets are incredibly manipulated. We wait for the next central bank announcement. We see central banks intervening in the equity as well as the bond market and interest rate market. It's just, wow.
Oh, it's crazy.
Yeah.
The financial markets, the financial participants, the firms, the sell-side companies are populating all the business news. They have America's Most Wanted on all morning long. First we're going to hear from UBS, then we're going to hear from JP Morgan Stride, these people are the ones who made the mess, have profited off of it, and need the rest of us to be their dumb fodder so they can abuse our capital.
And at times illegally too. You think of
totally
all of the
illegally.
cases like Libar case or the Deutsche Bank admitting to manipulation of gold and silver. That list is a long one now.
Well, it's been the age of impunity, as Jeffrey Sachs wrote an excellent article in May, the age of impunity. It's absolutely true. It's true for Donald Trump and his fraud at universities. It's true for Hillary Clinton, and it's true for all the major financial heads, the Jamie Dimon over stumping against Brexit. Did you catch that this week?
Yes, I did.
Going around with the finance minister basically like a puppet on his lap telling everyone what they should be doing. We got to get this financial cartel back, broken up into bits, and put in service of the real economy. And until that happens again, which is going to take, as I say, I think a major washout where everyone realizes that they're a bunch of fraudsters, like it happened in 2008, but then they got reprieved by the QEs and the central bank manipulation. Now that we're at the end of that, as I said at the outset, I think truth will dawn here, and people will realize they've been robbed blind again, and then you're going to see knocking off zeros, writing down debt, and finally, I'm hoping, political upheaval that will necessarily break up the cartel. So I think it's all coming. It's been a long cycle, but you want to be ready for that, and you don't want to be the carnage in the mean reversion cycle. So that's my, I think, main message to people. Don't buy this idea you can passively hold a bunch of overvalued assets and it's all going to be great. It's a very dangerous strategy.
Well, good stuff as usual with Danielle Park. You can find her at jugglingdynamite.com. She writes a blog there. She also has the author of the book, Juggling Dynamite, jugglingdynamite.com. She's the president of Venable Park Investment Council. Thanks a ton. This is great stuff. Thanks, Danielle.
Thank you, Mike. Always a pleasure.